Hey traders, hope you're all doing well and having a good start to your week. It's been a minute since I've done a video, but I'm back because I just wanted to announce that my new course has officially released. If you were an email subscriber of mine, you'd already know this, but for everybody else, the general public, this is the first announcement that I've made so far. My new Candlesticks Mastery course is available right now, and I'm really proud of it. I think it's a great way for anybody who is looking to add a deeper level of knowledge to their candlestick analysis and their ability to spot trend lines and spot support and resistance levels and all that good stuff. I think that this is a course that can really help anybody in their trading. And in just a minute, I'm going to take you through a real quick screen share that's just going to show you just how prevalent and constant these patterns and these levels are every single day. Now, I didn't even trade this morning because I had some business appointments that I had to take care of early in the morning, so I wasn't actually able to take advantage of any of this action. But after my appointments were done in the morning, obviously I looked at the charts and I saw the same thing that I see basically every single day, which is very valid support and resistance levels getting touched, levels being respected, and candlestick patterns forming that you can almost, set your clock to a lot of these patterns. Now, of course, there's never any guarantee that you can make money in the market. So I definitely don't want anybody to think that I'm guaranteeing success if you do what I tell you to do. All I'm saying is that day after day after day, I see the same patterns emerging and I see the same levels getting touched on the same indicators that I use, and I'm able to profit off of these things every day. And today was no exception. Even though I wasn't trading today in real time, when I went back a little bit later on and took a look at the action, I saw a number of different places where the price action did touch exactly where I expected it to touch, and it did the things that I expected to do when it touches certain levels. And I'm going to explain all of that in just a second. So really, I just wanted to announce the new course and tell you all that if you don't already have it, you should go ahead and pick it up. If you're serious about increasing your knowledge of candlesticks, candlestick patterns, and understanding support and resistance levels, and fattening up your ability to see these things on the charts and draw your own trend lines for yourself. So without further ado, let's get into the screen share and I'll show you exactly what I saw today and why what happened today is what you can basically expect to happen almost every single day. So let's get into it. Okay, so now we're taking a look at two charts from today. These are two tickers that I trade quite frequently. We've got AMD over here on the left, and we've got the Qs on the right. I trade both of these a lot. And so today you can see basically two different ways that you could spot an entry. On one of these tickers, we don't really have a very recognizable pattern, but we have a very valid level that gets respected. And on the other ticker, we don't really have the respect of a particular level, but we have a very valid pattern that's formed. So this just shows that on any given day, you can look for candlestick patterns, you can look for support and resistance levels, and you can look for both of them combining together, and you can combine them with what you see on your indicators to give you the right idea of when to enter or exit. And in a nutshell, that's what I do basically every day that I trade. So like I said in the intro, I had some business to take care of today, so I wasn't trading this morning, but after I got finished with my business, I came back and looked at the charts, and I was kind of bummed out because if I had been able to be in front of my screens, I would have definitely taken advantage of this. Now let's take a look first at the triple Q. You can see right away, right before the open, right here about 809, we just bounce right off of the 200 EMA, which is, as you know, if you've been watching this channel at all, an extremely important indicator, the most important indicator for me actually. And it bounced right off of it, and it attempted to come back up and kind of break through right before the open at 823, failed, came down, and here's the first moment that we touch on a valid level. And you see this line right here. This is the high of the day from Friday, and this right here is the low of day from Friday. And so what happened is, right at the very beginning of the day, this is 2 minutes in. So this is 8:30, 8:31, 8:32. We came down and essentially bounced right off of this high of day on Friday. But you don't want to jump in right away. You want to give it a couple minutes and see what it does. Because even though we bounced off of this high of day from Friday, we've still got all of this resistance right above us. We've got the 50, we've got the alligator indicators, which is a collection of moving averages, and then we've got the most important one, the 200. So before you actually get in long right here, you'd want to see how it plays when we get right up against these indicators. Turns out it didn't even have the strength to do that, and it actually fell right through the high of day on Friday just a few minutes later with a fairly high degree of conviction right here. And then if you look below, you can see the MACD crossed over the signal line right before we opened, and it just really fell out really hard. But the important moment to look at is right here at 9:06. And this is where a skilled trader can always look for multiple ways to make money. And I like to trade within the first hour of the day every day. And a lot of times you can make all of your money within that first hour, either going long or short, and sometimes both, depending on how aggressive you want to be. Like if you wanted to get really aggressive today, you could have opened up a short position right when you saw this candlestick break through the high of day with authority, and you see the very heavily trending alligators. You see the 200 start to really take that pronounced move to the downside. And knowing that we've got this lower half of the high low of day on Friday, what I would have done is, if I entered short right here, I would have expected that we came down close to, if not actually touching, this low of day Friday. This is what I would have expected. And so if I was in short, I would have opened up my position right here when I saw this really pronounced red candle. I would have opened up a short position. I would have been closing contracts on these big red candles right here. I might have even added in, when we had this slight little retracement right here, closing candlesticks, and I would have tried to be out basically all or almost all of my position by the time we got to this low of day from Friday, because I would have expected that we would have bounced off of this. Now, how much of a bounce were we going to get? I'm not sure, but the main level I would be looking at for a bounce would have been right here, the 200. So if you were real aggressive, you could have gone short right here. And then as soon as you saw this candle, you would have opened up a very, very small starter position long. You could have added into your starter position and added to the position right here on this big green candle, with the expectation that you could probably see a move up until this 200 EMA. Now, of course, there's never any guarantees, but we're just talking about what you can reasonably expect to see happen. Like, if this happens, then this is probably going to happen. So basically, when I would see this, if this happened, I would say to myself, we are probably going to go close to, if not touch, the low of day from Friday. And then if we bounced off of the low of day with conviction, like we saw right here, I would say we are probably going to get back up close to the 200 EMA before we actually lose steam on this trend. And then as you can see, for the next hour or so, we just basically were creating lower highs. So here you've got a trend formation pattern happening. You've got an intraday high right here, a lower high, a lower high, a lower high. We're just falling throughout the day. And so, that's a quick way that you could play the cues today. Now, over here on the left on AMD, not so pronounced as far as the actual levels go. We do see the low of day from Friday right here. You see for AMD, this is the high of day on Friday. This is the low of day on Friday. We come out, we bounce up, we come off of the low of day, fall out. This level right here creates itself as a valid resistance level about, by a half hour into the session today, this has become a resistance level. So I can make a little marker right there. And then when we actually break through this level at about 10 minutes after 9, this is a little bit more kind of nebulous here. I don't think I would have probably wanted to get involved in AMD today based on this, but this is not the point of this chart. This is the point of this chart. You see this very pronounced double top pattern where we see the left side of the double top at about 9:40. We see the right side of the double top at almost 10 a.m. And so if I was trying to trade this today, I probably wouldn't have done anything right here. But if I saw this double top, this is a very well-defined double top, plus the right side of the double top is even a little bit lower than the left side of the double top, which makes the pattern even a little bit stronger. So if you had gotten in on this double top, maybe opening up a starter position right here at 9:59 or 10 o'clock, and then added on to it once you saw price break below the 200 confidently at about 10:24, then you could have ridden this for, another hour of downwards price action. And we do kind of stall out with the downwards trend over here by about 1:30. But, if you got in right here at about 10 o'clock and then rode it all the way down here for, at 11:30, you would have gotten an hour and a half worth of solid downwards price action on your put contracts based on being able to spot this double top pattern. So just to wrap this up real quick, over here on the Qs, we didn't so much see a pattern forming at the beginning of the day, but we saw price very predictably play off of levels that I expect price to bounce off of. And that's where you make your moves on this chart. Over here on AMD, it's not so much of an actual level being tested at the very beginning of the day, but then once we see this actual pattern forming, this is a pattern that you can be relatively assured is going to do a thing, which is exactly what happened over the next hour and a half once this pattern was established. And so, if we've got this level right here that has been established as a valid level way back at 9 o'clock, then when you see the right side of this double top forming and you get in short, you can be reasonably confident that if price does break below the 200, you can expect to get it down until at least right around this moment on the charts where we touch our level, our intraday level that's already been established. And, that's just a simple way to take a look at support and resistance levels, create trends, and play the price action based off of the candlesticks interacting with your levels on your charts and making patterns that are very identifiable on your charts. Okay, we're back. I hope you enjoyed that quick little breakdown. And if you liked what you just saw, there's plenty more of this in my course because, basically, my entire course is a lot more of what I just talked about for this, quick little breakdown of today's action. And in the course, I actually do multiple live trading days where I take you through an actual, real set of trades that I will take from the opening until the point that I close the trade, making money all along. And, it's really a lot easier than a lot of people think that it is. It really just comes down to trade what you see. Don't trade on speculation or what you think might happen or what you have a gut feeling about. Just trade what you see. Because when you literally look at the candlesticks that are right in front of you on the charts, when they're doing certain things that you are aware of, more often than not, other things will happen that you will already be prepared for when you know what you're doing. So it's really just as simple as that. Trade what you see. And if you learn how to do that, you will be more successful as a trader as the days go by. So hope you enjoyed this. Hope you're having a green week and keep up the good work if you are. And I'll be back soon with some more content. So until next time, take care of yourselves.